This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on a Tuesday. I'm Cesar Delgado from Back Roads of Illinois. We were talking about the agricultural industry and information on the grains markets. I hope that you will join me for Inside of the Farm sector on Back Roads of Illinois for each day only on Agri America podcast page and on my YouTube channel. It's Back Roads of Illinois. I hope that see you there this season was pretty good. But we were drying out for this fall after the growing season in central Illinois. However, there are a few pockets of the drought in severe case in Champaign County. We were talking about it with Doug Hanson from Proceeds in central Illinois. And he is pretty happy with last week's deals with China, but the cattle markets is not much to it. He is joining us, Brian Grete from Commstock Investment. This been Back Roads of this season was pretty good, but we were drying out for this fall after the growing season in central Illinois. However, there are a few pockets of the drought in severe case in Champaign County. We were talking about it with Doug Hanson from Proceeds in central Illinois. Hey, Doug, how are you?
I'm doing good, Caesar. How are you today?
Doing good. Doug, let's discuss about this growing season in central Illinois. However, there is a drought for this week. Can you tell our audience about your respective of this week?
You know, as we look at, if you want to be specific to this week, we are seeing a lot more dry in most parts of Illinois, and absolutely some extreme dry in that Champaign down through Shelbyville and a few other counties now. That has hurt us. It did hurt us in corn and soybean yields in the end. We did see that as we got into harvest. But then we also have had, one of the areas I specialize in is forages and cover crops. We had a pretty good grazing year in a lot of Illinois early on, and then it turned dry enough that our fall grazing has gotten to be was actually almost non-existent. So we've started tapping into a lot of hay, and the cover crops that got on early had a really nice start. But we definitely, we're calling for some rain this week. I hope we get it for the cover crops, for the wheat, and for those pastures that need to grow some before winter starts.
How is the beans yields in Ford County?
So if we look more specific to like Ford County, Iroquois County, Will, we actually had some pretty good bean yields. Especially for some of those areas. There's sometimes there's some pretty tough soils to work with, but we did see pretty good rains into the summertime, early August, and did end up with some pretty good yields in those counties.
Yeah, it's tough for this season.
Well, now I said we did end up with some pretty good yields, but because we did get so dry the end of August and all of September, it for sure did take some yield off of the soybeans. So I think we could have had a bumper year in the counties that we were mentioning. Champaign County, still, from what I know, and surrounding counties to Champaign, did have pretty good crops for as little as rain as they had all year. But they were still affected. It did take some yield away from them for sure.
We see that this harvest season is over for this fall. We rubber for both of these crops, corn and beans, of course. How can we get to meet to planting some cover crop with this drought, Doug?
Yeah, that's now that we've had that calendar turn to November, I would only recommend utilizing cereal rye. It can germinate at 34 degrees. I know there is still availability in the countryside. Up to about 10 days ago, we were still using barley and some triticale. But I think those products have become pretty risky once you get into the first week of November and for sure later than that.
How about winter wheat?
So winter wheat, surprisingly, in my territory, and again, that's where I spend most of my time right now because we're finishing up this harvest season. It looks good, and for the most part, it looks good because we did get one or two rains on most of the wheat that was planted. Areas that did only get one or have gotten none, if it's up, it is very thin or very low percentages up, maybe 30% or 60% is has emerged, and the rest is just waiting for rain.
Do you have any concerns about some rain in central Illinois?
Well, so Central Illinois needs rain for wheat, for sure. Needs rain for all those acres of cover crops that are out there, so that we can get some more growth. Especially if they are only if they are a winter killed cover crop, they definitely need some moisture. We do still have some decent heat for this time of year. We've got more growing degree units than what we would normally have here in the last 2 weeks. And I think we're still okay. I know there's going to be a cold, like an Arctic blast there Sunday or Monday, but then I think we do, average out into a little bit above average temps. So if we would, I know a lot of Illinois is calling for a rain here this week before the weekend. That rain is extremely needed, and if we don't get it now for those things, we're going to need some moisture, kind of going through the winter just to try to get some creeks filled again for those people that rely on that for livestock or even for their own livelihood. We need to get some water back into this soil profile for the winter. Even if we're not growing crops, we need to have some moisture back into the soil profile.
Can you tell our audience about this growing season? How was the weather over the summer, Doug?
So my territory is mostly from Will County down to Vermilion County, over into Ford County, and then 3 to 4 counties in Northwest Indiana. We had in that zone, we had pretty good moisture most of the growing season. Everybody in that zone or in that territory, did experience some dry that did cost them some yield, but then in some cases, whether it was July or August, got more rain than you normally get for that time of year. So that really helped those areas. Now, if you get for Highway 24, once you get into Indiana and north, there's a couple counties there that was really bad. They were dry all year, and I know it definitely did. We did see below average yields on quite a few acres in that area.
Thanks, Doug. I hope that you're done with this harvest season.
Well, as we're talking here, they've taken out a few varieties while I'm been talking to you, Caesar. And I would say I got about one more hour to go, and then I will be done with this harvest season myself. I only have a few more customers with a few more acres to finish up, but this is my last plot for the year, and I'm done farming on my own acres as well. So thanks for having me as a guest again. I always enjoy being a part of your program, and I hope the rest of this fall and into winter is good for you, Caesar.
Good to hear that about the harvest season in. Doug Hanson from Proceeds on Back Roads of Illinois. He is pretty happy with last week's deals with China, but the cattle market says not much to it. He is joining us, Brian Grete from Commstock Investment. Hey, Brian, how are you? And are you doing your happy dance about this deal?
I'm doing well. The happy dance I'll leave for a little bit later. I think that there's still some details to be worked out, and we'll see how it all shakes out. But for now, at least we have a deal with China. We know some specifics that they'll buy 12 million tons over the next 2 months, and then 25 million tons per year the following 3 years, at least according to U.S. officials. We haven't gotten confirmation of that from Chinese officials yet.
You're bringing some soy sauce.
Yeah, so China will buy some U.S. soybeans, and that's the good news. They didn't have anything on the books for the 25-26 marketing year to this point. And now we're starting to see some of that business already develop. The question I think that everybody has is, will they live up to their end of the bargain and agreement and continue to buy U.S. soybeans? Because ultimately it comes down to, is the U.S. price competitive, and how much supply do they get out of Brazil?
Brian, let's talk about this deal from last week. What is your thoughts on it?
I think the deal is good for U.S. agriculture and especially for soybean producers. We need more of this. USDA and U.S. officials are out there trying to drum up additional business from other countries as well for soybeans. But China obviously carries a lot of weight in the marketplace, and we've seen that reflected in price action. From the beginning of October, basically through Monday, we had gained almost $1 in January soybean futures. And that was in anticipation that we would get some sort of deal with China, and that they would be a big buyer of U.S. soybeans moving forward. And so we got both of those. We pulled back on Tuesday with a big price drop there. But, after you've rallied $1 or roughly $1, a pullback probably isn't too much of a concern at this point. Now we need to see how much of this demand develops.
Do you have any concerns about demand for soybeans or their hogs production for the future?
So my concerns, I guess, are, one, does China live up to its obligations within the trade deal? And two, where do we move forward in terms of finding some of the demand that we already have lost to China in the 25-26 marketing year? And how does that all play out from a price perspective? Because each day that prices go up in soybean futures, it drives up our export price, which makes us less competitive against Brazilian supplies. And so ultimately it comes down to price. Are U.S. soybeans competitive versus Brazilian soybeans? And if they are, then that will drive decisions from the demand perspective from not only China, but other buyers around the world.
If they are leaving for a deal, how is the cash basin relevant to it?
Yeah, so basis plays into the overall price, obviously. So the more demand that we have coming from China or other sources, the better your basis is going to be. And we've seen that to some degree throughout the harvest season here, where basis actually improved in some of the areas, not just for soybeans, but also for corn. And so that told us that the near-term supply wasn't enough to meet what the demand requirements were. That was before the Chinese deal. So now we're going to move some more soybeans out the ports and heading to China. And so I think that you should see somewhat of a basis improvement. I think what we saw coming out of the fields initially was maybe one, the yields weren't as strong as what was anticipated, which reduced the near-term supply. And two, farmers stored as much as they could out of fields initially, and what's left in fields still to be moved that will have an impact on the near-term basis. But I think that the farmer stored as much as he could, waiting on the market to rally. Now, we saw a soybean rally, and so we've seen pretty aggressive sales from the farmer side of things here recently.
Right. How are you getting back into the upward to the beans markets?
So we saw the January futures move to $11, and I think that that's a critical level. We traded at the highest level we've seen in a year in that contract, more than a year, just over a year. And so we need to see if there's sustained buyer interest at that level. And largely that's going to be driven by export demand and demand from China and export soybean rates, both out of the United States and China, or out of Brazil, excuse me. And so it's all an interesting dynamic as we move forward. We obviously want higher prices, but we have to weight everything against each other. And the higher the U.S. price goes, the less competitive it becomes, and also the more farmer selling that it induces. And so there's an interesting set of dynamics now that we've gotten soybean futures to rally over the past several weeks.
How is the fundamentals on January beans for this morning?
Well, as I mentioned, we saw the big run up, almost $1 to the upside since the beginning of October. And then on Tuesday morning, we pulled back and pretty significantly and basically erased all of Monday's gains there. But when you look at it from the longer term perspective, meaning over the past month, really we just pulled back about 20% of that rally. And so we'll have to see how things shake out as we go forward. Because China has to buy 12 million tons per the agreement through the end of the year, we should see on a pretty regular basis Chinese demand coming. Now, everything that's been purchased so far has been by state-owned firms, and none of it has been by commercial firms. It doesn't really matter from a demand perspective in that a bushel of soybeans out the door is a bushel of soybeans out the door. But it does matter from China's perspective in terms of how it's going to be used. If it's being purchased by state-owned firms, it's likely going into state reserves, versus if it's purchased by commercials, then it's going to be used near term for crushing and animal feed.
How about the technical buying brine on the shorts?
So we saw the funds be pretty active on the long side of the market. We don't have CFTC data because of the government shutdown, so everybody's kind of guessing in terms of what the positions were. But I think we saw funds flip from a short to probably a small net long on this recent price action. The question now becomes, will fund money continue to flow into the long side of the market? And, that's partly a fundamental and demand function and also partly a technical function. So as we sit here right now, Monday's highs are pretty critical in terms of near-term technical resistance. And from a fundamental perspective, obviously, demand will be the driver.
What is the fundamentals on the cattle markets about the beef imported dilemma?
Yeah, well, the cattle market is, if nothing else, volatile. We see that on a day-to-day basis with just extreme volatility. Big price moves up, followed by big price moves down, and we've obviously fallen pretty significantly from the all-time highs posted recently. But with that said, we're still at elevated prices from a historical standpoint. Honestly, I don't think the fundamentals in the cattle market mean as much as money flow. And by that, I mean just a lot of speculative positions and movement right now is dictating day-to-day price action within the cattle market. The big question out there is when the U.S. will open the border to Mexican cattle imports again. And a lot of speculation on that front. U.S. officials have told us that they aren't ready to do so yet. and still we see on almost a regular basis where there's all kinds of rumors floating around the marketplace and really driving price action. Obviously, that would be negative for the feeder cattle futures and for live cattle futures. And that's some of the recent price pressure that we've seen is speculation about when the border will reopen to Mexican imports. We don't have a date yet. I think it's on the horizon. I'm just not sure if it's the short-term horizon or the medium-term horizon in terms of when that border gets reopened.
How is the cash cattle side without the government today in the north?
Yeah, so the cash cattle is an interesting one. We saw the run up to all-time highs, and then we saw a big pullback from there. We also saw that there was a big divergence between the northern market and the southern market, and that narrowed up and basically got to even ground. And then last week we saw the northern market trade sharply lower very early in the week, and we saw the southern market trade much later in the week and at better prices, much better prices than the northern market got, but they didn't move a lot of volume. And so we will see. There just aren't a lot of cattle in the southern plains at the moment, largely because of the lack of Mexican feeder cattle coming in. And there's interesting dynamics going on in cash cattle, that's for sure. I would think that we're probably close to a short-term low from a cash perspective, but I don't know how much upward momentum we can build.
How is the lean hogs markets today?
So hogs continue to face seasonal price pressure. That's very normal for this time of year. What we're seeing is that the cash index is bleeding lower, and we aren't seeing big chunks come out of that, but yet the futures continue to fall. And I think that we will see traders be very comfortable with big discounts in the futures until the cash market stabilizes. With that said, seasonally, we typically don't see a low in the cash index until sometime in early winter to sometimes midwinter. And so we have some time yet before traders really have to worry about the big discounts that are built into the winter month futures.
What is your final thoughts about the beans markets for the future?
Yeah, it all comes back to demand. If China is an aggressive buyer and lives up to its commitments within the trade deal that was recently signed, I think that that alleviates a lot of the pressure that had been weighing prices down. With that said, above $11, I still think it's kind of tough sledding, so to speak, for soybean prices. We would need some sort of bullish factor outside of Chinese demand, in my opinion, because we got to that level very quickly after the deal was done, and then we kind of somewhat stalled out. And so that is setting up as a critical level. We need to find fresh buyer interest from a speculative standpoint above $11 in the nearby futures to have any kind of upward momentum from that level.
Where people can find out more information on your services.
Absolutely. Go to Commstock.com and check us out. So that's COMMSTOCK.com. And we have a full service of brokerage and risk management that we can offer to producers.
How about the technical buying?
Right.
Thanks, Brian. Let's go Iowa State for wrestling this year.
Thank you for having me. It's been a pleasure.
Brian Grete from Commstock Investment on Back Roads of Illinois.